I bet you heard of trendline trading at least once, or maybe even tried it yourself. However, I guarantee you haven't encountered this specific trendline break strategy I'm about to reveal. Mastering this approach will transform your trading methods forever. The initial step is to draw a trendline. For an uptrend, connect all the higher lows with your trendline. And in a downtrend, connect all the lower highs. Make sure to capture as many touches as possible, since a trend line is only valid if the price touches it at least 3 times. If the price touches it only twice, the trend line isn't reliable. Keep in mind, the more frequently the price touches the trend line, the stronger it becomes, similar to support and resistance levels. Next, you must wait for the trend line break. At this point, observe what the price does. Even as the price starts breaking the trend line, continue to wait. When the price finally breaches the trend line, don't rush to enter a trade. Many novice traders make the mistake of selling as soon as the price breaks through, only to lose money when the price reverses, resulting in a false breakout. Avoid this mistake. Remain patient. Rather than entering the trade immediately, use your rectangle tool to highlight the candle that broke through the trend line. Draw a box around it and extend it to the right side. The third step is executing your entry and exit with precision. Wait for the price to return to the candle that broke the trend line. When it does, observe carefully. Once the price retraces back to this candle, remain patient. Don't enter the trade right away. Look for a confirmation that the price is rejecting the rectangle area you marked. This is the signal to enter a trade. In the subsequent candle, you will notice that the price is rejecting the entire rectangular area, indicated by several long wick candles. These wicks suggest the price is unwilling to rise further, validating the retest. This is the moment to enter your sell position. Once you have the confirmation that the price is rejecting the rectangular area, place your stop loss above the candle that initially broke through the trend line. Position it just above the box. Now, here is the crucial part of your take profit. This concept is essential, as it holds the key to the entire trendline strategy. Zoom out and draw lines at each point where the price touched the trend line. These points will serve as your take profit levels. To clarify, let's focus on 3 key points, which we'll name point A, point B and point C. Your first take profit should be set at point C, and if the price breaks through it, your next take profit target is point B. Here's how the strategy works. You can either take all your profits at point C when the price reaches it, or take partial profits, closing half of the trade at point C and letting the remaining half run to point B. Once the price hits point B, you can close the entire trade. Now, here is where the strategy shines. The price is likely to reach point C first, then move on to point B, and finally, it may head down to point A. My approach would be to take the first profit at point C. Let's observe what happens next. As the price declines, eventually it will hit your first take profit at point C. At this stage, you'll have closed half the trade, leaving the remaining portion to target point B. When the price breaks point C, it may proceed to point B, so adjust your take profit to target point B. Continue monitoring the price action. If the price retraces but doesn't stop you out and then hits point B, you will have achieved your second take profit, closing the entire trade. Note that I'm using the daily time frame as an example, but this trade typically takes months to reach take profit. However, this isn't how I trade personally. I prefer using the 1 hour or 4 hour time frames for this strategy. The daily time frame is simply easier for demonstration, but feel free to use any time frame you're comfortable with, whether it's 15 minutes, 1 hour or 4 hours. This strategy is effective across all time frames. Now, after breaking point B, the price is likely to head toward point A, just as predicted. If the price breaks through point A, it might continue down to the next significant level. While it's possible the price will reach this lower level, there is no guarantee it will go that far. The price reverses before reaching the first trendline bounce. That's why I advise taking your first profit at point C and your second take profit at point B, as there is no certainty the price will reach the initial trendline bounce. Here is another scenario. This time we are in a downtrend, and we can draw a trend line connecting all the lower highs. The price has bounced off this trend line multiple times, confirming its validity. Remember, a valid trend line requires at least 3 touches, and this one has more, so it's strong. The next move is to wait for the price to break the trend line. As shown, the price eventually breaks through, and this is the moment to zoom in. Identify the candle that broke the trend line and use your box tool to highlight it. These two candlesticks are the ones that broke the trend line. However, resist the urge to enter in the trade immediately. This is a rookie mistake. As professionals, we wait for the price to return to the boxed area before entering the trade. Watch as the price retraces upward and then returns to the rectangle area. Once it does, look for confirmation that the price is rejecting this area, signaling that it will rise again. This is your entry point for a buy position, based on the long wicks indicating rejection. Place your stop loss below the rectangle area, beneath the candlestick that broke the trend line. For a precise entry, you could wait for a doji candlestick to form, which suggests the retracement is losing momentum and buyers are regaining control. This is the optimal moment to enter the trade. Now, the price has retraced to the candlestick that broke the trend line, providing another opportunity to enter. Set your first take profit at least the last touch point before the trend line broke. As you can see, the price has already reached this take profit level. Your second take profit should be set at point B, followed by point A. Place your first take profit at this level. If the price reaches it, adjust your take profit to the next level. After the price hits the first take profit, move your target to the second level. Once the price has hit these levels, consider re-entering the trade if the price retraces back to a previous level and then heads down again. If the price goes straight to the target without retracing, refrain from re-entering. In this example, the price broke through point B, retraced to retest point B as resistance, and then continued down. Ideally, you could have waited for the price to break point B, then enter when it retests point B as resistance. The price eventually hit all the take profits, point A, point B, and point C. This trendline strategy proved to be extremely effective. For more advanced strategies with high win rates, be sure to check out my video about the Wyckoff method. See you there.